Good morning.
Good morning. My
sorry.
name is Ming Richardson. I'm the compliance broker for Maximum One Realtor and Realty Partners.
My name is Alan Richardson. I'm the managing broker here at Maximum Realty and Realty Partners. And we're your hosts for our weekly real estate backstory. Now, we normally do it every Monday, but with the holiday, we're kicking her off on Tuesday morning. So we're glad you could join us. We kind of want to move into, we see a lot of things happening on the market, things that are changing, growing, evolving, and that kind of stuff. And so one of the things that we've seen is we're seeing a lot of opportunities for maybe opportunity is the wrong word here, but signs when properties are overvalued, because we are seeing where still there's some sellers who are really trying to stick to their guns and they still have some unrealistic ideas. And so we kind of want to give you a couple of tips and tricks to try and identify those properties.
There's your sign.
Yeah, well, sometimes literally, right? So the first one is that if a property has been on the market for a really long time, if the market's already rejected it,
So what does it mean by real long time, Alan?
Well, we're seeing where new properties are going into contract still within 2 weeks. And so properties that have been on the market for 2 weeks may need to start looking at price adjustments. Either that, or maybe the agent, like the days of just sticking in the MLS, putting a lockbox on it, signing the yard, and praying are over, right? We have to truly market our properties. But generally speaking, the longer a property has been on the market, the more likely it is that it will need one or multiple price reductions.
And the reason being is that, with the rising interest rate and also consumer confidence, where they don't feel like the property is worth that.
Yeah.
They're kind of waiting on the other shoe to drop right now, but it's not dropping like we said before.
Well, and then, the other thing you want to watch out for is properties that, really are just overpriced. When you pull the comparables in a neighborhood and you look at those comps, and there's always that one or two houses that are just
right out
there. And so one thing is make sure that we're always pulling comparables, that we're doing CMAs, that we're very, very comfortable in doing CMAs. That's so important because that helps us know kind of it helps us explain to the clients what's happening in the market, what we see going on with that.
And listing agent, when you get ready to do a listing appointment, pull the neighborhood. If you got a lot of inventory, then let your client know that they're in competition with multiple sellers. So that makes a difference, okay? Whether or not you can price your property at much higher value, depending on the condition of the property as well. So anyways, number of homes listed in the area does matter.
Well, and so her point is spot on. A lot of times we see a neighborhood and like the entire neighborhood will be overpriced. And so we kind of got to watch out for those as well. A home that has no comparables in it normally indicates that it's very easy to get to be overpriced in that neighborhood. And sometimes you'll have where, we just saw this past week where there's 3 different comparables or 3 different active listings in the same neighborhood. In my opinion, all 3 were overpriced. And so, but there's no comps in there yet. So you got to kind of watch out for that as well.
And also, if the condition of property does not match the price, meaning if the property has a lot of deferred maintenances, don't expect your property going to price out like the neighborhood where it has been updated. So once again, between that and little or no improvement, if the property has no improvement, it's still builder grade, don't expect to get high dollar for those properties.
Right.
Okay?
Well, and the other thing is to really be looking at has this property been on or off the market multiple times already? Because if it's been on and off the property multiple times already, that could really be kind of a signal that there's issues. We've seen that before where there's normally a reason why a property is going on and off the market, that kind of thing. So we want to start sharing with you a little bit of I'll try to pull this up here. And so there we go. Thank you.
All right. Share home getting price cut in America in one of our biggest housing markets. So let's talk about where the cuts are. As you can see in this graph, you can see what's high in purple is the highest price cutting point. So Atlanta, guess what?
We're not as bad as a lot of markets. We really aren't. And so we are seeing some price cuts come in. We are seeing some price cuts come in at a little bit higher price points than some of the others. And so right now we're having about 36% of our properties are having a price reduction in. going right back to the thing that we were just talking about there. This squeeze on list prices, you're seeing, if you're watching the news right now, you're seeing where all these economists are talking about the housing market declining, the housing market's dropping, where it's going to be dropping the most. Okay. And so, they went in, they polled these economists and real estate pros. And so they're looking at San Francisco, San Jose, Austin, Denver, Seattle, Las Vegas, Phoenix, Sacramento, Portland, Dallas, Nashville, Tampa. They've even got them on all these kind of spreadsheets and graphs. Guess what isn't on the list?
Atlanta.
Boom. Right. Atlanta is not on that list. And so we have a lot of really great things going for us here. We have a very positive net inflow of new people moving back into here. We still have a relatively lower cost of living than a lot of other places around inside the U.S. We have a little bit better inventory. We don't have nearly, we don't have hurricanes. We do have some tornadoes here and there. But, all in all, Atlanta's a really great place. And it's also one of those where, a lot of these markets shot up much higher in value. Now, we saw price increases here too. I'm totally down with that. But that being said, it wasn't to the same degree as some of these markets that are now starting to level off or even tipping down a little bit. That's not us. And so we need to understand that still real estate is local, right?
Correct.
So, what we're seeing here in our area, and so like this is the graph for Atlanta. I'm Alan, losing my mind today. But what we're seeing is a lot more pressure on entry level or lower tiered priced homes. And so you can kind of see on the graph that, the homes in the lower tier are getting more competition. There's just a lot of things going on, right? And then if you look at, where are sales down? Well, like year over year, you can see the top tier sales are down about 20%. Middle tier sales are down about 8%. However, our lower tier is only down 2.4%. And that 2.4% isn't based on demand. It's based on supply. Still trying, find a house, under 225, under 250.
Our starter home the inventory is very nil, and while investors are building, of course, apartments and rental properties.
Yep. And so, the same thing that we're seeing is when it comes to price cuts, the homes with the price cuts, guess which tier has most of the price cuts?
Luxury homes, 30%,
yeah,
30.9. That's
right.
huge, y'all.
So we're not seeing nearly the degree of price reductions happening at our low, even in our mid tier. We are seeing them largely happen in our upper tier, which is not necessarily that surprising, but it's just good to know. See, like we're not in the, over the past few years, it's been very interesting because in past years, our market was very much broken up into price points. But what we're seeing now, but for the last 2 years, that wasn't the case. Everything went up.
Correct.
Now we're moving back into that where we're going to see different markets and different environments based on the price point. So now, as far as the overall economy, we talk about real estate, but the economy impacts us. And so after 4 months of decline, the consumer confidence index finally ticked up. And so we're glad to see that.
And I think that's partial because a lot of buyers saying, oh, the market's crashing, therefore we need to wait. And after about 4 months, there's no movement of the market crashing. So now they feel more confident that the current price is probably what it needs to be, if not just slightly lower.
Right, exactly. And now also at the same time, job openings topped 11.2 million, okay? And that's a very important number because still what drives commercial real estate, but it also drives residential real estate is jobs. And jobs are still really, really strong. So now we have seen interest rates tick up. We're at a 5.66 this week. And so, with the interest rates moving up, that really, a lot of that comes from the Fed chair last week, getting, basically letting Wall Street know, letting Wall Street know, listen, hey, we're keeping the pressure on until inflation goes down. They are here to hammer inflation. They want to see inflation moving back down towards 2%. They did see it start to level off, but they haven't seen it really start to drop. So I do expect that, when in this next week, they're gonna go ahead and announce what's happening with the federal funds rate. But I don't see interest rates rising because they've already risen. The market's already reacted to that because our mortgage and our mortgage rates are based on the 10-year treasury largely, not based on the federal funds rate. So now, at the same time, one thing that we've actually seen very, very interesting is the average FICO score in the US has continued to rise and rise
Which
and
is a
rise.
beautiful thing, y'all. That means that we have more qualified buyer based on credit score, but the debt to income ratio still had to come in line.
I mean, 717 is the average FICO score in the United States right now. And so we use that kind of as a benchmark, like you need to be, the average is over 700. And so for a lot of our clients, it should be the expectation is your credit should be running that number. If not, then that's something that you have to manage that.
And on the average, about 10 point up from prior pre-COVID.
Yeah. So now this also came out, speaking of mortgages. So the Bank of America announced a 0 down payment, 0 closing costs, and no MI. And it's for first-time buyers in Black and Hispanic communities. Now, this is not only for Black and Hispanic buyers, so it doesn't violate fair housing, that kind of thing. But it is in those communities, and in a way, I mean, it's kind of like some reverse redlining almost. These are predominantly Black and Hispanic communities, and in order to buy, I mean, you can buy in there. Now, that's the good news. The bad news is not in Atlanta, and so
it's only in Charlotte, Dallas, Detroit, Los Angeles, and Miami neighborhood.
Now, that doesn't mean they won't be moving here. We were talking to a B of A loan officer, and they know it's on the books, or they think it is, kind of thing. We're going to wait and see kind of what's going on. But I just want to bring you aware, because if your clients see this, and if you see this, understand that, yeah, I think this could be very good for minority neighborhoods to get more folks in the houses. So if you got
family members that are looking at buying those places, this is a good time for them to talk to Bank of America. Understand with Bank of America, the only stipulations that they take a while. So be patient.
They are a little bit different to deal with on the lending side. You're exactly right. So
just don't expect the turn.
We're trying to be politically correct.
Well,
right?
no, I mean, just make sure your timeline is correct. Otherwise, you're gonna have a lot of downfall and a lot of disappointments. Okay.
Now, the market really is seeing a lot of concerns about the pricing and what's going on, because right now the challenge for the housing market is really twofold. Because on one hand, we have rising property values, at the same time we have rising interest rates, and so that's created a situation where a lot of Americans are having a hard time putting more money towards savings and saving for their down payment. And also just their overall living costs are really, really high. And so that's starting. And so there was a study this past week, or that came out this past week.
Well, honestly, with this, the whole entire thing, it has impact how they're going to spend. I mean, do you buy less at groceries so you can save up more money for down payment? I mean, so entertainment, I think entertainment is going to be hit for those who are truly looking at buying a home and trying to save up.
Right. So now rent increases in the last 12 months, one thing that, I mean, we talk about residential real estate a lot, but in the rental market, about 64% of all properties or all rents have risen in the last 12 months. Some by less than, or by more than 10, more by 20, and some by more than 30% kind of thing. Mm-hmm. And so you can see where a really big piece of that pie is pretty significant in there. And so, we know that that's causing a lot of challenges, but it also makes it one of those where it's very difficult for folks to be able to afford higher rents, and at the same time be able to save up for those down payments and that kind of thing. And then this is then causing a lot of home buyers to change their plans. Now, what's really interesting in here is that, there's a large percentage of folks who have decided that they're less likely to buy, but there's also a pretty significant group that is more likely to buy, kind of thing. And some folks are not changed at all. So the market is just not going down the tube. So please don't be there. Again, we saw, the same
like we
slide.
said before, near 60% of renters saw increase in the past 12 months. And I'm seeing more and more of that. And sometimes the investor just has to remember whether or not, with their continuing increase, whether or not a buyer is just going to say, we're tired of this. We're going to buy, and we're going to work on next year to get our down payment, our credit, and also,
well, we want them to be in the game. They're not going to, 5 years from now, if they're renting still,
Yeah.
going to have no increase in their net worth.
And the thing is, even though the folks I actually saw wage gain, a third of them, their wage gains enough cover their rental increase. So it is an issue. So,
But once you get a mortgage,
yeah,
and it's a
it
fixed mortgage,
stays.
that's your mortgage. It doesn't matter, right?
Mhm.
That number is staying there. And so, we saw national rent growth take a little bit of a dip, but guess what? It's heading back up again. And
So,
so, this is really
and a
significant.
lot of people say, instead of 2 bedroom, I'll just do 1 bedroom. Guess what? 1 bedroom is actually very
Well, that, and
desirable.
then life starts to really stink when
Mhm.
you get all crammed in there, kind of thing. That's just there's no joy there.
Yeah.
So now one thing that is concerning for us is that construction spending is down. Total number of units down. However, non-residential, meaning multifamily, up, and that's one that kind of worries
We're
us a little
seeing
bit.
a swap here. So,
And we want to see more residential building going on and less multifamily, because what we have is investors that are basically taking that wealth that a homeowner would be building.
with that said, if that
But we just need more
continues,
houses,
well,
right?
if that continues, it's going to drop some of the rental price. So that would be good for some renters.
Yeah. So we're going to kind of wrap up here with the 2022 housing market sellers survey. So they went out, and so Realtor.com or Realtor went out and they surveyed just a ton of sellers and got some really interesting information, kind of thing, about and so the first one, home sale price. Where's our biggest demand? Guess where our biggest demand? Just like we were showing earlier, it's in that 350 or less price point. Now these are national numbers, so here in Atlanta, it's really anything under 300 is pretty much on fire there, kind of thing. What percentage of our sellers are satisfied with their home sale? I found this one to be very, very interesting. Is our Gen Z and our millennials. But if you also think about it, our Gen Z and millennials are moving in, and they're having to compromise on price so much more than any of our Gen Z, our Gen X, our baby boomers. They're selling in many cases and moving into and then moving up or changing over, and they've already seen those price appreciations come in.
And they know what's going on. And unfortunately, with millennial Gen Z, this is their first time buying. So it has been a very challenging time for them.
Right. And so you can see that they're not very satisfied with that whole process. Now, this is also good information about.
I partially think because the millennial and Gen Z, I'm sorry, they do a lot of online research, but they really need take some time and really sit with a realtor and have a buyer consultation. I think with a buyer consultation, they could understand a little bit better how the process works and just talk to their lender as well.
So these are the reasons why the homeowners decided to sell. So some folks just wanted different amenities, take advantage of the current market. Some folks just needed money right now. Didn't need to live near the office. That's telework is not is a thing.
Almost 30% is taking advantage of the high risen market right now. We have friends, once again, like I said before, sold their property and moved into a camper, and that's their permanent home for the time being. And they know the market is going to swing, but how long would it take? We don't know.
We think that's going to take a long time. So we don't see it dropping by any means. So now buyer friendly terms and contingencies, we are seeing this. We're seeing this in real time right now, where more and more of our sellers are expecting contingencies, working into their pricing, contingencies, repairs, home warranties, closing costs. It's all in there. We're seeing where that and that's happening. We're seeing that right now, real life. And I think if you're in the market actively buying and selling, you're seeing it out there too. So that's good. We're moving more towards a balanced market. I actually saw a DPA the other day, which is awesome. Down payment assistance. Yeah. So and by the same token, what are the sellers' response to repair requests? Growing. Getting bigger and bigger. More and more sellers are making the repairs requested, or making some or majority repairs, or offering money and concessions in there, kind of thing. So we're seeing where the sellers are realizing the market is shifting. Correct. And so, it used to be, we saw homes going with no inspection, no due diligence, yada, yada, yada. Those are scary because I can tell you a lot of folks probably call their agent back. Yeah. So, our median days on market continues to be really, really tight. You know,
14 days right
and,
now.
and so the new listings coming on the market are moving quickly. The listings that are sitting on the market are sitting on the market, and that's what we're
Correct.
seeing. They're having to take those price reductions. Still, 82% of all of our listings are selling in less than a month. Okay, this is not a market that is in the tank. If you look back at where it was in 2015, 2010, that kind of stuff, I mean, it's a big change. Now, this is one thing that we're seeing, and that is average, number of offers received on a sale. That's down about half. And we're even seeing sellers who are like, well, we need to leave it on the market. We only have 5 offers. Like, hold on, that's ridiculous,
Yeah,
right?
go on a day
You
of
need one,
52,
right?
Yeah,
you need
got
one. You only need one offer. That's all you have to
You need
have.
one solid offer.
So the days of having
52
70 offers,
are gone.
Yeah, that's done. And so we need to make sure that we're setting clear expectations with our sellers on that. The number of buyers that are waiving contingency, that's dropping. And we're really glad to see that, because we don't want a buyer ever to waive their contingencies. We think it's a bad, awesome. And the more of that drops, the less we're going to see where people fall out of contract or the contracts die.
And also satisfaction in purchasing, honestly.
Yep. Now, at the same time, distressed sales are at its lowest level ever, right? Okay. And so some folks are like, well, it's going to be 2008. It's going to be 2008. No. Do you know anybody that's upside down in their house? Absolutely not. So even if this economy does cause somebody to, they're just going to sell it and cash out. That's what they're going to do.
That's what we've seen what's happening.
So
is that well-educated listing agent are telling the seller, hey, listen, you have equity. Why throw this money away?
Yep, exactly. All cash buyers, they were peaking up, and now we've seen that drop down. And so that's really good, seeing the all cash buyer percentages are coming back down a little bit.
And partially because of the value, rising value of the property.
It just sees the same thing that we're going on. Now, the one that we have seen, and we've seen this same thing at the brokerage, is non-primary second home buyers
are down.
They are down. They're down significantly,
and that's because the interest rate, because when you have a 2.5% versus 5.5, it's a huge difference in monthly payment. So now they're not so interested in second home, simply because the mortgage payment is really, really, really high.
Yep.
So anyway, just want you guys to know we are doing replay and Maximum Partner Office. So if you want to replay a Tom Ferry Summit, please contact our office and let them know. Yeah.
Come on in. We are we're doing it seriously, come in. We'll play it for you. In the past years, we've tried to schedule it, and it just wouldn't work out good for everybody's schedule. So we've had some folks come in and attend. One gal will be in the conference room. One will be in the training one. One will be over here, kind of thing.
Just call, see the availability.
Yeah, come in and please. It really was a phenomenal summit with so much great information. We have the books ready for you, that kind of stuff. And so please, we encourage you to get that training, to get that education that you really need.
Well, this is about yourself different from the others, honestly. If you want to grow your real estate business, you really need to know what the market's doing.
Yep.
If you're okay with 1 or 2 transactions a year, then that's okay. But for those of you who want to grow your business, move with the market, please come in. We would love to see you.
So today I'm teaching Making Money Real Estate Investing. That's here in our Fayetteville office. If you're going to get here, you better leave now, because it starts in about 15 minutes.
And tomorrow we have a estate divorce investor companies who can sign contract. And that's being taught by Beth or Lula Larkin and Hunter in our Newnan office. And of course, Thursday, you'll see me talking about code of ethics in our Conyers office. So see you guys then, and have a fabulous Monday.
If we can be of any service, please call, text, smoke signals. Bye, y'all.
Thank you.